Good morning and welcome everyone to the Ultimate Trading Webinar for Beginners. My name is Danny and I will give you the webinar today. We're going to have a notepad for the notes before we will begin. And like I said, we're going to open the webinar with an introduction to the company. So as many of you know, we're here for nearly 2 decades. We're here since 2006. We have 9 licenses worldwide. In case you got a question or a query regarding anything under the customer service, you can access the customer service right here at the bottom left via to chat with us or on the WhatsApp. If you don't use this interface, you can contact us over cs@avatrade.com. If you've got any questions regarding trading, anything's related to trading like risk money management, analysis, any kind of decisions regarding trading, your strategy, so you can have a senior account manager that will be assigned on your profile and give you full support through the process. This is something you can check with the customer service depending on your eligibility, unless the senior account manager contacted you automatically after you've made a deposit. So like I said, customer service for customer service, senior account manager for everything under the trading umbrella, right? Okay, so besides that, we're gonna continue, as I said, with the web trader, but we're gonna write down the other platforms that we have. Oh, sorry, that is now called the AvaTrades trading app. It looks a bit different since this is a computer, a desktop version we're using today, but the app is the AvaTrades trading app is the obviously the app, and it might look a bit different than what we see in here. We also have the MetaTrader 4, MetaTrader 5, which by the way interacts with the web trader, and this means that I can do my analysis on MT4 or MT5 and continue modifying my positions in here, or vice versa. I can open any positions that I want in here using this interface, this facility, and then go to MT4 or MT5 and modify my position. Okay, so the web trader and MT4 and MT5 are connected. Okay, we also have other options. We have other futures, which we added, and we've got other social. I would like to say a few words about Ava Social, since Ava Social is related to the agenda of the whole webinar, as this is a webinar for beginners, but it's not only for beginners. Ava Social is extremely useful app for intermediate and pro traders as well. And the reason for that, it's what you can do with Ava Social is copy trading. You can do copy trading. Basically, it allows you, if we're trader A and we would like to copy trader B, and this could be from various reasons. Not always as a beginner, I'm certain about my strategy or if my strategy is good or not. So by copying another trader who is more experienced than I am, I might be inspired to maybe make the necessary improvements. Or if it goes well and I'm happy with the progress, maybe I'm just gonna keep copy trading and keep it like this. By the way, another excellent feature that this app has is you don't necessarily need, for instance, our balance at the moment is $10,000, right? But what if, for instance, we are, as I said, for the sake of the example, we are trader A and we have a balance of 10,000. Okay, but what if trader B has a balance of, let's say, 50? Okay, or if it has a balance like mine and mine is lower. In this case, what can happen is my account might not be able to withstand the necessary requirement margin levels similarly to this account because it has more money than I am. In this case, I can still copy the strategy, but I can choose to do it with a lower lot size, and I can choose to maybe do it with a minimum or anything else that makes sense to me to help me contemplate if this strategy is something that my account can withstand or not. okay, and I can make the necessary changes. So I think this is a great app for you to explore. Okay, of course, if there are any questions until this point about anything that I said, including Ava Social, I'm happy to. Please feel free to let me know using the question section at the bottom left of your screen. You can ask anything you want. This webinar is live, as I said. Okay. Besides that, we're gonna easily carry on with the web trader. As I said, in order for me to either fall down or maximize the chart, I can click here on the two tiny arrows. This way it falls down. In here, I can click X and I'm where we were in the default by default. It's also important to say that, okay, so we saw that this was extended by clicking on the arrows, and the menus to the right appeared when I clicked buy or sell. So let's again try it again, and I can always change. Okay, what we're going to do at the moment is we're going to look at the menus to the left, starting from the top going down. The top left corner is where I have my personal details. In here, trade is if I want to trade. In here, positions to modify my positions. In here, orders to modify my orders. And history, which allows me to also determine what range of time I want to be displayed here. The signal section is for signals, of course. Sometimes, as you can see, the signals are equipped with take profit, entry, price, stop loss, and the type. Sometimes the signals doesn't have any take profit or stop loss. We'll understand in a moment what it means. But at the moment, what I want to do is, in order for us to understand a bit better how the signal works, is we have two types of orders. We have market execution and we have pending orders. Basically, among the pending orders, we have stop loss and take profit. What it does, stops the position automatically with a profit when reaching the designed price. And stop loss, what it does is it does similarly, it stops the position, closing, say closing the position automatically. This one is with a profit and this one is with a loss. It means that in a moment we're going to see what I can do when I'm trading. For instance, we're going to use the what we've got at the top. Let's go with S&P, click on view signal. We've got those values here. We'll understand in a moment what they means. We'll click here on the arrow to expand the chart. We'll then click here on the column price, click and drag to make it a bit smaller. At the moment, if you look at the top left, we see that in here 1M is selected. 1M is 1 minute. This segment here is minutes. If we scroll down, this segment is hours. Underneath, we've got days, weeks, and months. In order for us to see a similar picture to what we see here in the chart, we've got a validity. It says here daily, but we are marked on 1 minute. Obviously, we're not going to see the same levels displayed on the picture. So we're going to scroll down, click on 1 day. Now we do have the same validity. We scroll and click and drag down, and then we've got similar levels. This way I can make a better choice about what scenario I want to proceed with. At the moment, it seems like it's in a buy type. In a buy type, our intention is that the value will always increase. When we buy, our take profit should be above the price. As we've learned just now, what take profit does is it closes the position automatically with a profit. So if, for instance, I'm going to click here on the buy, let's go with the buy scenario as written here at the top, click buy. And we see we've got the values here placed for us. Okay, at the moment, I'm looking at the ratio that doesn't look too great, and that's fine. Maybe I'll try the other scenario, we'll see. Click here on the arrows, click here on the signal, click here on the sell, click here on the arrows, and now we've got it upside down. Now, similarly, since with a buy, we always want the value to increase, with a sell, it's the other way around. So when I am selling, our intention is that the value will decrease. What that means is that further down the price is going to get from where it's at right now, more profits we're going to make. The more the price will increase from where we are, the more we will lose. And as you can see here, the numbers, which I haven't done anything, by the way. You saw that as soon as I clicked sell, those things was were placed for me. Okay, so what this means is if it gets down to 6,444, we will make $131. If it gets up to 6,490, another $7 from where we are going to lose $20. We can, by the way, change the lot size if we would want, and we can make the necessary changes in here as well. Okay, so the signals are really, really simple to use. 3 clicks and we can make it. Let's take another, maybe something else as an example. We'll click on oil. As you can see, we can even see the take profit and the stop loss from the outside. We don't even need to get on the signal to do that. But let's click here on view signal. Again, it's daily. Click here on the arrows. Oh, okay, we are 1 day. It's great. We click here on the column price, click and drag down. This time we're gonna go with the sell type as it's written here. Click sell, and great, just great. We have the numbers already placed for us. We can have the lines where the prices are at. Let's also make it like this. Now, as I have explained, whatever modifications I would like to make to this position can be done, but I'm not obligated to make any changes. I can just keep it like this. Of course, another side note, when we increase or decrease the lot size, it means that we increase or decrease the quantity of what we are trading with. Meaning, if I increase the lot size, my possible profit or possible loss will increase accordingly. So if I reduce to the minimum, this is what's going to happen. And if I increase, for instance, for 0.2, this is what's going to happen. So I can make the necessary adjustments to fit to my needs. Now, sometimes we're gonna click here on the X, click here on the arrow, and select something else. Also, it's important to know that the signals are structured from the newest to the oldest. Newest being at the top. So sometimes we are going to see signals that look like that with the blank take profit and stop loss. As you can see, those values are not here. What does it mean? It means if I click here on view signal, we'll see it says here there is a message, the market has already reached a key level. What does that mean? It means that the analysis that was done in here was already fulfilled. In the scenario, as you can see, there is certain support and resistance levels, and when it reaches when it reaches the anticipated prices, the signal can no longer be used. And even if I'll try with the buy, what's written here at the top, it's still not gonna let me have it. We don't get the take profit and stop loss similarly with the prior two signals that we saw. Okay, now it's also important to understand that there is a certain effectiveness depending on when the signal was produced, and this is an example to where the market has already reached. Okay, so it means if I'll scroll down, okay, this gets older and older, and I would always want to pick a signal that I feel confident with the analysis that it's still relevant for me to use. Now, As we saw, the signals are analysis, technical analysis based, right? So we can see in here, we don't know how the analysis was done. It was provided to us by the trading central, but we clearly see that there are lines here on the chart, and there is a pivot point, and there is support and resistance, and this is already some analysis. Now, in analysis, we also have two types of analysis. We have technical analysis and we have fundamental analysis. Okay? And what does that means? I know that people people don't like to to work a lot. They only want to do maybe one type of analysis. But I'm gonna tell you guys that it's important to combine, because if I'm only technical and I don't acknowledge none of the news, none of the economical changes. Okay, let's write what it means. So we've got in here. We still haven't learned what it means, but I'm going to explain to you as we move along. So levels of support and resistance. We've got statistics. We've got averages and indicators. Okay, now which will be the how things are moving. But on top of that, we also have articles, right? And we've got Trump. Let's put it governmental decisions. Okay, and on top of that, we've got all kind of things that nobody really has any control, that still, okay, any kind of changes like that can cause a lot of just a second. So this will be the why. So from one side, we've got levels of support and resistance, statistics, averages, and indicators. This can be the how. From the other side, we've got articles, governmental decisions, war, transportation issues, which will be the why. Now, why is that important for me to know all those kind of things? Because if I'll see at the chart a drastic change, let's see, let's go back. You could see, for instance, we just saw when we saw oil, okay, you see that those kind of things are things that I need to be on top of, where where I'm doing, where I see those things, I need to know what fundamentally happened during those times. So maybe next time that I would like to enter to a situation like that, I can be prepared. And if I'm going to show you in a moment on the economic calendar, there are events in scheduled times that we can even book it into our calendar. I'm going to show it to you in 2 minutes, maybe less. Okay, but first, what I want to do is I want to keep. We saw the signal section. I want to click on the news. So this is another way to. I almost forgot to write here news, but even though all of this is news, but whatever, still it's maybe this way it's a bit clearer. Okay, so this is, we see here the pre-European market brief, some interesting things here which we can read about the S&P. Okay, if we scroll down, we click here on correlated instruments, and it's even specify what instruments. We see Ethereum, crude oil, gold, Ethereum, and Bitcoin. Great. Okay, so this is a one nice way for me to also be a bit more familiar with the current news. If I keep going down in here, we see that underneath, under discovery, we also have market buzz, which we can also use. And then in market buzz, we see those bubbly things, which we see that right here at the center, we've got Big Bear AI, and we've got 180 Life Science Corp. Okay, all kind of just interesting things. If we go with Big Bear AI, we click here and we see there are all kind of parameters in here. They're all different various topics, earning below expectations, revenue guidance lowered, all kind of things. Let's suppose we want to focus on the earning below expectations and see what's going on. This way we can filter out the necessary articles and dive into it very specifically and efficiently. Okay, now we can click here, go back. If we want something else, we can choose Tesla as an example, see again what we want, then carry on with ease. We also get the parameters. Okay, now if the last thing that I'm going to show you, I promise before we get to the practical part, is the economic calendar. Okay, just a few moments, guys, and we can begin the practical part. We see that some things are selected. It's okay. We can click here on reset, go back to default, click here on the current date, click here on another week, and then when we see this blue trail giving us the range of what was selected, we'll see that now it's going to display from the 13th all the way down to the 20th. Now, we can also notice this red line is separating the font, which is a little brighter, to a font which is a little, maybe a bit gray. And we see that in terms of what's written here on the columns, we've got how strong we think that this event will affect the market. Actual will be the result, yeah? We've got what we are expecting, so a forecast to a certain range of expectation, and the previous, which was the last result, which sometimes is revised. Now, as we can see, if we scroll down, we see that until this point, all the actual is filled. What does this mean? It means that those events already happened. So scrolling down again, and from here downwards, there is no result. Okay, this teaches us that beyond the red line are things that happened, below the yellow line, things that didn't happen yet. Now, we can also filter. At the moment, we've got everything. We see all the countries. So we can click here on the arrow. We see nothing is selected. If we want to focus only on US and the Aussie dollar, if we click only two of those, this is what will be displayed. And as we can see, this one is much easier. So we can see only 6 events already took place. Oh, sorry, 5, 1, 2, 3, 4, 5. Okay, and the rest is US events. One more thing that we can filter out is also the impact. So those are small events, low, medium. Yeah, so apparently only tomorrow we've got something with high impact. But until tomorrow, all is low and medium. Now, I'm not saying that low and medium are not things worth analyzing. Of course, everyone can do whatever they want. But if I would want to focus only on the main events, I could go and click on high, and then only high will be displayed. Again, if I would want to reset everything just as I did in the beginning, I can click here, go back to default, nothing will be selected beside the dates. On top of that, just a moment, guys. On top of that, if I would want to search for a particular event, I can click here on the magnify and type here in the magnify whatever I'm looking for. Yeah, there's no much to say about the economic calendar. Oh, there is one more thing. To the right, we've got those 5 icons, right? The impact, volatility, price chart, event chart, and lastly, add to calendar. Now, this is amazing. This is really amazing. And the reason is, even if there is an event, I'm not necessarily going to be free / remember when it's going to take place, and if I would want to set up my charts and indicators, I'm not always going to be prepared for that. What this allows me to do is it allows me to book my this event onto my calendar, and then I have a reminder 10-15 minutes beforehand, and I can go to the chart, set up the things the way that I want. I think it's just amazing depending on which calendar you're using. So this is just great. And I think we can finally ready to begin the practical part. Okay, let's click here on the AvaTrade to go back to the default. In here, we're going to select an instrument. Okay, so there are two ways to do that. For instance, if I'll click here on the arrows to expand the chart, in here I can type whatever I want. So let's say Tesla. Even though the market is closed at the moment, the US market is closed, but still just to show you how it works. So I've selected Tesla. I'll click here buy to open the, as you can see, it opens in almost 3 hours, the market. And in here, let's change it into gold, okay? I type gold, I select gold from the list. Keep in mind that we're still with Tesla. So I click here on gold. Now gold is selected, but Tesla is still displayed. In order for me to fix that, I can either click buy or sell. This will fix it right away, or I click here on the X and then select it. But I'd rather just click here buy or sell. Then I can always change it. And now it's the correct instrument. Okay, actually, I think Ethereum, from the articles of what we saw, let's look at Ethereum. Oh, and the third way to select an instrument is obviously manually. I can search in here also, but if I would search, let's click here on crypto for a particular instrument, and maybe I don't know the name, I just know the categories, so I can click here like I did here with crypto. I scroll down until I see Ethereum. So I'm going to click here on Ethereum. My account is a dollar account, so it would make sense to go with Ethereum USD. Click here on the arrows. Click on the buy or sell to open the order entry. Then click here on the column price, click and drag. Now, we can see that Ethereum, if I'll click here on the trend line, click here at the bottom, click here at the top, we see that it rose by 121% since a little more than 2 months, right? Let's change it to months. Okay, so we see 1, 2, 3, roughly two and a half in a range of 2.5. It did decline a bit here, but still there is no doubt that Ethereum is rose quite considerably. I could show Bitcoin as well, but I don't want to waste any time on that. Okay, so we're just going to enjoy what we have here, and to be more current and relevant, we click here, drag it to here, and we see that the recent increase was approximately 40%. Okay, still we're going to keep it like this. So there is no prior data about those levels, since this is an all-time high, so there is no point to mark any resistance at this point. I would use, so let me have another one just here to be feel a little more secured. Okay, now, okay, so let's believe that we're gonna carry on with the buy. It does seem bullish. By the way, for those who doesn't know, what does it mean, bullish and bearish? Anyone knows why are we saying bullish and bearish, and what does it mean? Anyone has any idea? It's an old fairy tale, so I'm not sure anyone will know that. Okay, so that's what we have. So that's Ethereum. Okay, so the story with the bull and the bear. Bullish means going up, bearish means going down. The reason is if a bull attacking you, probably will attack you from the bottom, lifting you up in the air, and a bear, God forbid, can slam you to the ground. So bullish and bearish, it's just a fun fact to know. Now, with Ethereum in mind, with this trend in mind, we simplified a few lines here for support lines. There is no, again, resistance to mark, and this is an all-time high. So there's no previous data about those levels. Still, how we can take advantage is very simple. First, before we do that, I would like to go through the toolbar from left to right. In here, we clicked and we've understood that this is a search bar. If we go to the right, in here is our time frames. In here, we could also change to a different line or bars if we would want. In here, we could change also to crosshair. This way, the data displayed on the chart. If you saw with the default crosshair, there is no data displayed on the chart. But if we switch to crosshair, we do get the number from the candles. I'm talking about the rectangle at the upper left. Okay, please notice without, it just doesn't give us anything. With, it does. If I keep going to the right, we've got indicators, and all the way to the right before the sell and the buy, I've got those nice arrows which I've placed on the chart already. Now, how can we know what price should we target since there is no previous all-time high? Okay, this is why it's called the all-time high, right? All right, now what we can do in this case is we could measure momentum and average to help us assess until what price Ethereum can get to using the statistics and averages. Now, if we get rid of the line we see in here and we keep this level 3,400 and maybe we'll make it a flat 50, right? This makes sense. This way, I can at least know what will be my let me have another one just in here, just in case, as this was there yesterday. No, I actually love what I did in the beginning. We'll switch to weeks real quick just to have a better idea. And this makes sense to me. Yeah, 3,950. I'm pretty happy with that. Let's put it in red. Okay, let's have the other one in red as well. But maybe also we'll push it down a bit. Push it down a bit. Okay. All right. Now, another pending order that I haven't told you about now because it was less relevant is execute when price hits. So we've got market execution, what we wrote, and we've got pending order execute when price hits. And what it does is opening the position, reaching the designed price. So on the contrary from the stop loss and the take profit, which closes the position automatically with the profit or loss, execute when price hits actually open the position when reaching the price. Now, what I can do is I can click in here and I can set my entry to be 4,000 and let's say 500. Okay, which will be, let's quickly switch to days again, click and drag down. This one will be right here. We can flatten that out like this. Click here, make it white. This will be our entry. And now we have 400 and okay, We'll plan that to be 4,000. We're 500 away. And at the moment, we are at 4,694 and changing. In the buy price, it's almost 4.7. Now, how can we make progress from here? We have an estimation where to enter and an estimation when to close it with a loss. We still have another goal to set, which will be the take profit. Now, if for instance, I would like my take profit to be 5,000, but I don't want to buy now because I think that if I'll buy now, Ethereum can still go down. So what I want to do is I want to let it to go down to 4,500. And if it does get down to 4,500, I'll feel more secured to take the buy, hoping it will go back to 5,000. Now, I'm going to click here on the take profit, click here on the stop loss, and I'm going to set the levels that we set. Stop loss can be 4,000, sorry. And then we're looking at 500 up and 500 down. I think it also can be helpful to have two rectangles just to help us emphasize the profit ratio and the loss ratio. Maybe we'll put it like this, a little higher. And this can be green. The other one will make red. Now we know that as higher as it gets from 4.5 upward to where we wanted will be our profit area, and the red will be our loss area. Now, this is all nice, but we're still missing the core foundations to compose this position. So first of all, what I'm going to do is I'm going to set a certain target, and the certain target will be, let's say, 1,000, okay, $1,000. Underneath, I'm also going to capture the time that I'm planning to hold this position. I'll be honest, I don't think that in a day it can move this much, but let's test with an indicator how much it can move per day. So one thing I could do is I could point on each candle, let's say so this is days, this means that this is yesterday. We see the open was 4,221, close is 4,587. That's approximately $360. Not bad. We can also see that between the high and the low, we've got 4,635 versus 4,217. This is also approximately $400. We'll do it together. We said high 4,635 minus 4,217. As we said, $400. Okay. Okay, but as you can see, this candle is different than the prior candles. And if I'll only rely on that number to dictate what ranges Ethereum can move, I'm not sure it will be precise. What I actually need to do is I need to accumulate a bunch of candles, a number of candles, and accumulate all those differences to give me an average, which takes time. Another way to do it is to use the average true range. So we're going to click on indicators. In here, type AVE for average true range. Click and drag it to the right. In here, I can simply choose how many candles I would like to withdraw the average from, and it will do it for me automatically. We can also change the color. This way, I know that the actual frequent movement for Ethereum to be per day is $200, not 400 as we saw. It's quite exceptional, the candle versus the other candles we see, which means that if this is the average per day and our target is 500 away, statistically, I would expect my 500 to happen in several days. If it moves 200 per day and I am $500 away, this could happen in several days. So the entry we saw was 4,500. Okay, the take profit, as we said, will be 5,000. The stop loss, as we said, will be 4,000. Now, with this in mind, we now know that the difference between the selected prices is 500 each. So 500 away. Also 500 away. And we've got now our movements. So our movements is ATR equals 200 per day based on 10, right? But if we switch to weeks, let's check the average per week. There we are, exactly, well, not exactly $1 away, but still, as we can see, when we switched to weeks, the indicator is changing accordingly, and it's giving us that the average per week, ATR 499 per week, which matches perfectly with the numbers that we've selected. One more thing to know, this 500 is not a guaranteed figure. This number is not a guaranteed figure. What does that mean? 499 is only the range based on the past 10 weeks, which means that Ethereum can move various up or down. It could be 510, it could be 470. It's not going to be exactly 499, as this is only the range. Great. The last thing that I would like to modify in order for me to get to my goal will be the number of currencies I'll have. So in the units, I'll put a question mark, and I'm going to put down an equation here, which will be the target divided by movements equals units. And if I'll divide 1,000 by 500 is how much, guys? Who can tell me how many units I need to buy to make 1,000 with 500 per unit? Who knows the answer for that? Correct, Arjan. 2. Whoever wrote 2 is correct. Whoever wrote 2 is correct. Okay, so we'll click here 2, correct. Now, we're also going to place here 2, and we're also going to validate this with the platform to know that the numbers are aligned. We'll click here and scroll up, change the 1 to 2, click here, scroll down, and we immediately see that the numbers are exactly as we wanted. Now, on top of that, we can still modify the numbers for a better ratio. But before we do that, first we want to validate that we do have the budget to take this position, since Ethereum is not cheap and we've only got $10,000. Now, in order for us to do that, we're going to put the price per unit, which currently, as we said, is 4,700. Okay, and then we'll multiply it by the number of currencies we've got. So that's going to be multiply 2. But if I would like to put it as a formula, this will be price per unit times number of units equals value. And then we've got this, double that, is 9,400. Okay, now I don't have to know that at all if I'm using the web trader, because this was done for me automatically, right? I also have the leverage here. The leverage, sorry, is 1 to 2. Okay, which will be my multipliers. What does that mean? It means that the leverage 1 to 2 gives me the ability to trade double than what I have for Ethereum in terms of margin. It doesn't mean that okay, so instead of 9,400, I would only need half of that. If this would have been 10, Okay, so I would only need half of that. Okay, so what happens here, what's happening here, is I can divide the value by my leverage to know the margin requirement, the margin impact. It doesn't, margin requirement and margin impact are basically the same thing. This is what I need to be available for me to open the position. Okay, and in this case, we definitely see that we can do that. I'm not gonna start discussing if it's a good thing or not to use 47% of your available margin for a single position. We're not doing that now. But in terms of ability, I do have, with this current account, I do have the ability to do that, as the margin impact is only 4,700. So if we go value divided by leverage, then we get margin impact. And as we said, margin impact is, just a second, is the necessary amount to open the position. Okay, great. Now, there we go. Okay, so we with the 1,000 in mind, okay, so we're gonna put here possible profit 1,000, which is 10%, right? And this will all will be the same. Okay, 10%. Now, what do you think about 10% though, in terms of exposure? Do you think 10% is something you'd be happy to? Is this ratio here is something we would be happy to work with, or we would maybe uh, modify it to be a bit more efficient? What do you think? No more than 0.5%. Okay, so George, you wrote no more than 0.5%, but I think 0.5%, 0.5% is not something that we can aim for, because, okay, we're maybe we'll see, and then we'll see if this can be done or not. So, but let's talk about how to make this 10% exposure maybe into 2% exposure, which I think can be a bit more logical than 0.5%, because if we're exposed only 0.5%, it means that the stop loss needs to be very, very closed. Typically, we could do one of two things. One thing we could do is obviously minimize the lot size, but in this case, we're only trading to Ethereum. So to reduce that will also impact our possible profit. So what we can do to check the exposure is, first of all, what we could do, because the possible profit and possible loss are based on the difference between our entry onto our closing. Okay, so basically what we could do is we could take the stop loss closer onto the entry. So if it's $500 away, and this gives us 1,000, what we can do is we can divide this by 5, right? Which gives us 100, and then our exposure will be 5 times less. So instead of 4,000, if we make it 4.4, now we are at 2%. Okay, we are now at 2%. Another neat way to know how much an amount is a percentage out of your balance. So how do we know that 200 is indeed 2%, we can go possible loss divided by balance equals factor, and then factor times 100 equals percentage exposure. Okay, this means 200 divided by 10,000, since our balance is 10,000 and our possible loss is 200. Okay, this means 0.02, and then times 100 equals 2%. Oh, sorry, I think it should have been 0.002, but let's see. Okay, and now we're gonna add, okay, this way. Okay, so 2%. Now, how is this useful? A very common question is, why, Danny? Why do we need to adjust? Why can't we work with the leverage of 1-to-1 or something like that? Okay, first of all, George, you now understand that if I aim for 0.5%, is 4 times less than what we have now, right? Which means if 1% is 100, it means $50. So $50, it needs to be $50 away. If my stop loss is $50 away, it might trigger in the next 5 minutes. Okay, maybe in the next hour, but never mind, you understood me. I want to give when I design a stop loss, I do want to give the market some some space to maneuver until it gets there, because I am aware that it might not get there right away, but it might fluctuate, and I want to be able to maneuver with it. Okay, I hope it makes sense. Guys, if there are any questions about the recent calculation that we've done or about anything that we've learned in this segment, feel free to fire away. One more thing that I would like to tell you guys, the numbers, this 10% is 2%. Keep in mind that if you diversify, keep in mind that this is for that position and that position only. So if, for instance, we're ending another position or we're trading something else, this needs to be accumulated. Okay, this is for a single position. If I have another 3 or 4 with the same ratio, this needs to be multiplied by 3 or 4. And this also means another thing you want to make sure is that your margin level, this is something we just learned, the margin level is something we always want to keep healthy, because when we can't comply to the margin level, when our margin level drops below the margin, the margin level drops below the margin requirement, the platform will close our position. Okay, so always ensure that you have enough margin. You can always free up more positions to have more margin, or you can make another deposit, but this is something that we want to pay attention to have fluent progress and to be able to perform our strategy safely. All right. Unfortunately, guys, our time is up for today. I really hope the webinar today gave you some practical tools for you to improve and get better with your strategy and progress. You're all welcome to join us with tomorrow's live Q&A. So I appreciate everyone who joined us today. Until then, I wish you all to have a fruitful week. Best of luck with trading and have a good day.